It's a mess in here. Hey, everybody, Real Estate Ninja. I got a great question that I want to answer today. I am moving things from my office, so my truck is full. But I took a few minutes to want to make a video, and it is based on a comment I got from someone. And they say here, and I cut off the comment. Sorry. So this is the part that I got. You raised a good point that concerns me. M2 money supply is collapsing. I'm not breaking things down right now because I'm at work, but very simple question. Will the banks be in a position to lend when everything collapses? And again, it's a little bit longer, but I cut off the comment and screenshotted it. So here's the thing. Right now, M2 money supply is dropping. People are pulling money out of the bank. They are putting their money to work for them to make as much interest as possible, as much of a return as humanly possible, to stave off or push back inflation. Now, that has caused the Federal Reserve to move in and do some emergency style actions. One is the repurchase window, providing liquidity for the banks. Now, I've explained this before, but I have to stress this. When people around you, you warn them and you say, hey, things are really bad. We are already in the moment where the Federal Reserve is having to do things to build up the system, and the FDIC, to keep the banks afloat, because banks have already crashed. FDIC is screwed. They're insolvent. They're needing to raise more money. The Federal Reserve is providing liquidity. We are already way past the 2008 moment. I know it sounds crazy, but housing is still on that blow off top coming down right now. That happened prior to the banks crashing. That's how bad it is right now. Why? Because commercial mortgage-backed securities imploded. We have a ton more derivatives out there than we did in 2006 to 2008, especially when you start taking into account cryptocurrency. We didn't even have derivatives. We didn't even have cryptocurrency back then, right? So here is the answer. This is why I've been wanting you to prepare for so long, because it's really hard to break out of the thinking that when everything's crashing, the banks are going to not lend. This is what always happens. The banks get fearful and they slow down their lending to a crawl because they have to answer their shareholders. And the Fed, throughout history, during those times, have always encouraged the banks to lend by either lowering the interest rates that the banks borrow the money from the Fed at to give to you, which in turn lowers your rate, which encourages spending, right? Purchasing, going into debt, but then also by providing extra liquidity to the banks when needed. But here's the other thing that people don't get. Banks only make money when they're lending. Let's just say they take back a house. Most people don't know this, actually. If you're foreclosed on and the bank sells the property in an auction or to somebody through an REO sale, actually, no, it's through the auction, because if it's REO, they would be purchasing it themselves. If they make a profit on what it was owed to them from what you owed to them, you are actually entitled that money back. But the fact of the matter is, very few people know that, because the bank isn't, I believe they're not really entitled to tell you that. They don't have to tell you that, but you can go get it. But when they get that money back, that money, you would think that they would go, okay, that's now sufficed that loan. We're good. Like, we're going to hold on to the money. They're not. They're going to go loan it out to many more people. Let's say they recapture back their $200,000. They're going to go take that $200,000 and they're going to go loan it out, because that's how they make money. So then they have to find people to loan it to. And that's why I've been trying to prepare everyone for this crash. And you have to get out of the thinking that just because your friend down the street, your neighbor, or your family member can't get a loan because they screwed up their credit card payment and they didn't pay a couple months, or they started slow paying their mortgage or their rent and it affected their credit score, doesn't mean that is for you. It means the masses, the majority, have fallen behind and they cannot now go out and get a mortgage because banks won't lend to them. But if you're ready for it, banks are going to lend to you. Banks do still lend. And even if you're in that moment in time where the bank is not lending, they're not actively out there pushing loans, they're not advertising, you know, how many times, like right now, I'll give you a great example. How many of you have walked into your local bank lately and there are multiple posters up for mortgages, car loans, or HELOCs? The reason why is because nobody's out there borrowing, because inflation's killing them. They're actively trying to give you money, but it's at too high of a rate with too many points. So if they get to the point where you're in that mode where your credit score is really nice, everything's great, and you can't find a bank that's willing to lend to you, and that's the sad thing. Most people, I've been teaching this for years, most people just go to one broker because they were, you know, referred to them by their friend. And if the answer is no, they go, okay, and they accept the no. You should never accept no in your life. But even if you went around a handful of them, people aren't lending. What will happen is it's not just you. If you have stellar credit, you've got your down payment, your debt to equity ratio is set up perfectly, set up right. Then what's happening if you're getting turned down by multiple lenders? That means they're doing that to everyone. And then what happens next is the Federal Reserve moves in and pushes liquidity. The government then loosens their standards, their underwriting standards on what loans that they will insure. And then banks absolutely love government-backed loans, loans that they know they can make to you, charge you fees, and then turn around and package that into a bunch of derivatives, you know, as, you know, package them up, sorry, the loans, and sell, not derivatives, package the loans up and sell those off to Fannie or Freddie. That is the easiest money a bank can make right now, unless you take into account factoring. Factoring is a whole nother realm of finance that banks bring in money from. So the answer is right now, yes, M2 money is coming down. This is very serious. We have not seen M2 money supply do this since the crash of 29, the Great Recession. People are pulling their money out of the banks. It has caused a bank crisis. We are in a bank crisis right now. This is what it feels like. But I have to tell you, this is what I went through when I started this the Economic Ninja channel. When I started that channel 3.5 years ago, I told you I was going to walk you through a crash, step by step. And one of the things that it's so hard for people to realize is how long a crash takes. We're past the Bear Stearns moment. We're past the Lehman Brothers moment. We already had that. It's going to be worse than that in 2024. But here's the cool thing. That's not doom and gloom. If you want to just sit back and be scared, if this kind of stuff scares you, if facts scare you, yeah, you're going to need a safe space. You're not meant to be for greatness. Now, I would hope that some people that are in fear because of all this news that's going on, and they realize it's serious, they just simply do something about it, and you'll become greater and more successful than you've ever been in your entire life. But I just want to stress that this is the moment that you've been waiting for. Keep getting out of debt. Keep your head up. Keep smiling. If your friends and family don't listen to you, and you know this stuff to be true, just go get some better friends. Come on. Just get around people that are like-minded and think like you, and watch what happens with this 2024. You're going to get blessed. You're going to be in a position, and you don't need a whole lot of money. You just need your credit score right. You need your balance sheet, your debt to equity ratio or debt to income ratio right. You need a good credit score. And I'm going to show you as this thing goes down, we're going to be buying up houses like you wouldn't believe. I can't wait to do it with you. I'm here for you. This is the greatest club ever. This is part of Ninja Nation. I hope you have a great day. The Real Estate Ninja has got to go move stuff, you know, like my office.